Marky, I never use a trailing stop. I think I've never personally. I dislike them strongly. It's one of those things as well that I don't know a single profitable trader that uses them. And it's not to say that somebody doesn't use them profitably. I'm not saying that. What I'm saying is that I like to set stops based off of where the last stop run was because I know if they've already taken out the stops once. For example, I always say setting a stop above a high or a low is a very dangerous proposition, but that's where every retail trader does it. If you've identified that as a stop run, in other words, if that has taken out the previous high or if that's taken out the previous low and that's a stop run, well, that's when it becomes safe to put your stop above that high or above that low because they've already spent the money to take out the stops. They're not going to spend the money again to drive the price back up above that high or back down below that low. It costs money to move. It costs money to move this market. So while they're trying to get in on their speculative flow, they're also manipulating the market with what I term as general order flow. The order flow of worldwide commerce, changing pounds into dollars, changing Australian dollars into U.S. dollars. This general order flow is money that can be used to manipulate the market as well. I personally like the idea of somebody trading a very small micro lot at the very least, and you're gonna win or lose actual live money, but it'll be a very small amount. And I think that's better than a demo. And even in that situation, you can even make each pip 10 cents. Never, I'd never recommend somebody go to an actual go to an actual live account without being profitable for at least a few months with with a setup like that because the market's going to be around forever. The biggest downfall of traders is that they're not patient, and they're not patient in learning something. They feel like they have to rush into the market. They feel like they're going to make a living overnight. It's not the way this market works. You're not going to make a living overnight. It takes work. It takes time. It just doesn't work like that. I would love to tell people it does, but I can also say this: we have traders that in a very short period of time, a month or two, are took more or turned a larger profit than I did the last couple months. And that's what gives me faith to say that it can be done, but these traders put in the work. They're not lazy. One thing I that just amazes me is that when somebody looks at our course, the first video has way more views than the last video. And so what that tells me is that people will pay the money for the course and then not even go through the entire thing, and they'll wonder, once they realize, or they'll not even go through the whole thing, and that is such. I remember one time there was this guy that and you guys, I don't know if you're what you guys all do for a living. There's a guy named Frank Kern. He's an internet marketer, and he sells things for, and he you know what, he's good at what he does in his niche. He's very good at what he does. And some one of my friends who's in that business, he was telling me this one time, and it just made total sense to what I see in this business, which is we put out a product which people go through it and they say, you know what, Sterling, I went through all the videos on the course, I love it, everything was good, and the people who put in the work find value out of every single video because we put a lot of work into it. But the one thing that he mentioned to me about what this guy sees in his business is that he'll charge people 2 grand for a course, and they won't even get through the first video. And people like the idea of doing something, like they like the idea of being a profitable trader. But as my favorite saying goes, the short-term pain of effort is often perceived to be worse than the long-term pain of failure. And nobody wants to put in that short-term effort. There's no better job than learning to trade forex. In my opinion, there's not. But people are afraid of a little bit of effort, and it's not even like it takes much. If somebody were to put in an hour's worth of work on a daily basis, they would become proficient fairly quickly. And I know that because of the feedback I get from traders. I ask them, "Hey, how much time do you put in?" Well, I put in an hour, maybe 2 hours. I'm talking of in the forum, there's a daily market review. I review what happened. I also preview what I believe is going to happen. You got to remember, it's important. It's okay to review things, but in my opinion, you have to see it in action, and that's why a couple hours before the London session, I talk about what I believe is going to happen, what we should be looking for. And so, there's 15 minutes of time somebody's going to have to take to go over. Maybe they're going over the forum and the different trades other traders are taking in the forum. Maybe they're asking questions. Maybe there's another 30 minutes. If they can be in the live room on Tuesdays and Thursdays, well, there's some more time. So people are more than happy to spend 4 or 5 hours a day watching TV, but they're not happy to change their life by working an hour a day towards something else. And that's really what we want to get at. And we suggest that people that aren't willing to put in the time never subscribe or never become a member, because we can't help somebody that's not willing to help themselves. All right, let me scroll up. I missed a few questions here. Daniel, you're saying, can you go over some examples of peak formations? We have had other. I'm assuming you're a member of Steve's class. I I've had other members ask me this question. I'm not really sure what a peak formation is. I've essentially, the way I have it had it explained to me is the fact that it's the last cycle before the market turns, and I explain this as a stop run because that's the way it's seen. I'm guessing that's what you're getting at. David, what is actually in the course? Well, David, the basis of what's in the course is the fact of the course is the foundation. What Chad and I have learned is that people don't learn. Number one, they don't learn overnight. Number two, they don't learn in a live room format, just watching us call trades. Those are two things we're very confident in saying, because we've had members that were with us for for example, I use Daniel as a good example because he's been around for a while. He was in our live room for um, you know 6 months or a year before we changed the format, and I never saw success in him like I do now, because he was became reliant on the fact that, okay, is Sterling calling a trade or is Chad calling a trade, and that never tends to produce a profitable trader. You have to make the choice for yourself. And so the course provides the foundation, and in my belief, and David, as far as your question goes, what is included in the course? It goes over the basic foundation, what we're looking at, how they tend to cycle the market, how they tend to manipulate the market, how we spot these manipulations, how we trade these manipulations, how we use our stops in and around those manipulations. And the market review reinforces what's in that course. It goes over, okay, we've seen this, we've seen, they started this cycle, we should expect this manipulation, or that manipulation, we should expect this type of move. And the forum allows people to kind of go over what they were looking at. So, um, that's a pretty basic overview. There's another overview on the course page if you want to look at it. I know I've missed a few questions here, guys. What do you think about? Uh, I would completely agree with you, Daniel. People pay for the course thinking it's a magic pill. It's not. I've always said Chad and I will put as much work into you as you're willing to put into yourself. We can't force anybody to do anything. we spend a heck of a lot of time teaching traders, and the traders that put forth the energy to ask us the questions, to put in the work, they're succeeding. Is everybody going to succeed? No. We can't help everybody because we can't fix what's between your ears. If you're going to consistently overtrade, if you're going to consistently over leverage, if you're going to consistently take 10 trades a day and think that's the way to be profitable, we probably can't help. And so we can give you the keys for success, we just can't make somebody use it. What do I think of people that say they are trend traders, they don't catch the high or the low of the day? Well, essentially, your safest trades are with the trend, but they're after you spot the manipulation. And when we say trend, we're not talking about the regular, what people would term as a technical trend. We're talking about the fact the market tends to be driven in 3 cycles, tends to be driven over the course of 3 or 4 days. It tends to have that a weekly range. They tend to drive the price, and so within that, the smart money cycle. I agree. The safer trades are with the direction of the smart money cycle, but we need to understand that if the cycle's down, we're seeing a massive stop run to the downside. Then there becomes a high probability that direction is in question from that point. If not a reversal. And so it's all about context, and those that trade with the trend, it's a nice way to sell a system because you can always, you can say, oh, this moved 700 pips or this moved 600 pips. Well, what retail trader do you know is actually going to hold on to the market for a 5-to-1, 6-to-1 risk reward? It's difficult enough to tell people to hold on for 2-to-1, let alone to get somebody to hold on for longer than that. It just doesn't happen. David, as far as a football analogy, go to the left and go to the right. That's exactly true. That's why London breakout traders, when it works, it's a great way to say, hey, look, you just buy the breakout or sell the breakout. Um, but the fact is, they often will test stops to both sides of that Asian range, and that's why having the confidence in the overall smart money cycle is going to give you the better indication of which direction you should actually look for the manipulation. I post a preview at about 11 o'clock or midnight, and that covers what we're going to be looking for the following day. And so that's the review that gets posted. There isn't a review before New York, no. John, I appreciate it. Thanks for the kind words. Glad we can help. Midlord, thank you as well. Is it always last swing high or low? The stop run. The stop run is the final indication of the stop run is given once the final indication of the stop run is given once the candles have confirmed it's a stop run. Okay, let me move on here. John, thanks again. Okay. Yeah, the room is during live hours, guys. You got to remember for the first, for the last 3.5 years, all I did was call live trades. There's a reason, and I don't mean this to pat myself on the back. There's a reason I'm not bad mouthed around the web, and that's because I'm honest with people. Hey, I can't help everybody. I feel like if somebody's gonna willing to put in the work, we can help you. But I also think there's an honesty and integrity in saying, hey, I've traded live in front of people for years. My overall profitability was never called into question because I proved to people I was profitable. I didn't just say I was profitable. I got in front of a room and I traded. Now, did that mean I had losing weeks? Did that mean that generally at least a month, 1 month out of the year, 2 months out of the year, I'd have a break even or a losing month? Yeah, that did happen. But the best hedge funds in the world have losing quarters, and nobody can deny that. And these are traders that have been around for uh, 30, 40 years with the best insight in the world, and they have losing quarters, let alone losing, let alone just a losing week or a losing month. So yes, the room is live. If there's a trade, I will call it live, but that's not the purpose of the room. All right, let's see here. Do you higher than one weekly? I look at, like I was mentioning earlier on the euro, the weekly cycle that we're in on the euro is to the downside, and we're looking for the third overall weekly cycle down. It's not. Sorry, I have a couple lines here. Let me get rid of those. It's not a coincidence that, even going back, you can still see this, but over the last 3 years, every cycle up, down, and now down has been in a three cycle move. And we're looking like we're about to make that third and final cycle down. And that's where the probability lies, in my opinion. And this is again on where each one of these candles represents a week. So this is, what we're looking at here is 3 years worth of time. Okay. The way I calculate lot size, guys, is at the beginning of the month, I'll take a baseline for the account, and I base everything off of a percentage risk, and that's because pips don't matter. At the end of the day, it's did you make a percentage gain or a percentage loss, but I don't change that percentage amount until the end of the month, and so I usually adjust that on the first of the month. Well, we've seen the thing is, after you've seen three cycles, you go into accumulation, and that accumulation allows them to exit positions and enter the new position. The fact that we've seen, a stop run above those highs during Asia, and that's where the market took off to the downside. It's not a guarantee. Really, I think the cycle direction is open at this point, and I'd be looking to uh, trade the manipulation really either way at this point. I think if we saw something like this, if we saw the market work back up to 3100, maybe see a stop run through 3100, something like this, where we blow out 3100. Let me go back here. What I'd be looking for Monday is the fact if we blow out the stops high above 3100, then work back to the downside. I'd be trading that stop run back to the downside, or we could see the market come up, make a topping formation at 3100 before working to the downside. That's a possibility as well. There's a lot of times we have an opinion on possibility, and it just simply doesn't do it. And that's one of the good things about identifying what smart money does. When you have a clear direction set in your mind, a lot of times if you're wrong, it just very simply doesn't give the entry. Do you find the higher time frames are more conducive to the overall cycle? Well, you're going to find cycles on weekly charts that span months and months, and weekly charts that's the two weekly cycle, or the two cycles we look at are the intraday cycle that tends to be again ran in three cycles, and the weekly move, which happens over 3 or 4 days generally, and those are the two cycles that we pay most attention to. You'll find a cycle, on the daily charts and cycles on the weekly charts? Yes, you will. But we want what's important to us, and that is the two cycles we look at. So that's generally better seen on the hourly and the 15 minute, as far as your question there, Charlie. Well, given the fact that it's a banking holiday, I would be a bit more leery. But I think as far as open to manipulation, we don't know what type of a stop run or what type of a gap we're going to get. There's so many unanswered questions. That's why when I do my review Sunday, I don't do my review until, you know, 10, 11 o'clock generally, because we don't know which way we're going to see the gap. There's so many unanswered questions until the market opens, that to just offer a possibility. I think that if we're going to continue to work to the downside, we're probably going to see them manipulate around this psychological barrier. I think that's the strongest indication we have right now. But until we see the market open, we just don't know. Because I mean, what if it gaps 50 pips? If we gap 50 pips to one side or the other, that completely throws out opinion. So that's just something we don't know that far in advance. I pay attention to the news because of the fact that smart money manipulates in and around news, and they manipulate in and around fundamentals. So, do I need to know overall fundamental direction of the euro? No, and it really, quite frankly, I don't care. Chad does. Chad pays a lot more attention to that, um, and Chad and I kind of disagree on that because he pays more attention to it. I don't. I don't feel like it's that important because I think smart money gives you everything they need with everything you need within the chart. The manipulation at the end of the day, everything boils down to where was the manipulation. If they've created a false push uh, to the upside, that can serve one purpose and one purpose only: induce buying and sell into the buying pressure. And that's why before the market moves down, you almost always see a manipulation up. The people that try to overcomplicate something that is so unbelievably simple aren't going to be able to work with it. It is that simple because supply and demand is that simple. Now, is that the only thing we look for? Well, of course not. I oversimplify it because I have an hour to explain to you guys information that I feel could help. No, and we're only looking at the major news. We're looking at things like UK GDP, UK retail sales, non-farm payroll. Uh, ISM was a big manipulation this month, but that was the first time in years that ISM is manipulated. So we're only looking at the major news releases: Aussie retail sales, uh, Aussie employment change, CAD employment change. Those major pieces of news that tend to create 40, 50 pip spikes. Exactly, John. News is, and I put out a couple videos on the manipulation in and around news. Hopefully that answers a few more questions. One thing I think the most important part I wanted to get across for anybody that's new, guys, this is something you gotta. This is what I wanted to cover earlier, and this is probably the most important thing that you should think about. I can't answer this question for you, but logically think about what I'm about to say. Every strategy you've ever used, what begins to trigger a long position? Does the market not have to start to work to the upside to trigger a long? You think about something like this where the market works down and then begins to work back up. What are the indicators doing? Well, they all start to roll over to the downside. And you know what? Some people might say, okay, well, we're beginning to roll back over. The indicators that your RSI is going to start to roll over at this point. Maybe short-term MACDs are starting to turn over at this point. It begins to work to the upside. As the market begins to work up, what in every system, what does it take for the market to trigger along? It takes the market eventually starting to work up, doesn't it? I mean, really, at the base foundation of every mainstream strategy, it takes the market going up to eventually trigger along. Everyone's going to have different criteria and trigger at different times, but that's the baseline of what it takes. The market will have to go up to begin to trigger along. If the market's falling, they're not going to trigger along in a mainstream strategy. So as the market begins to work up, begins to trigger those longs at different points, whether maybe it's based on candle patterns, maybe it's based on indicators, maybe it's based on a breakout of a high. Either way, it takes the market moving up. Well, think about this for a second. How does smart money sell the market? If they want to sell the market, don't they have to have buyers? That simple fact right there puts every mainstream trader exactly against smart money. Smart money or retail strategies rely on the price going up for them to begin to trigger along. Smart money relies on the price going up to sell into buying pressure. So that basic fundamental of how all mainstream strategies work puts retail traders the majority of the time at odds against the banks. Now the banks control the majority of the volume and therefore they control direction. So if you look at, again, and what does it take for them to buy the market? On the retail side, what does it take for a retail trader to if the market starts to go down, does that not begin to trigger a sell? It takes the market falling for a sell to be triggered. You think of all your strategies and go to the foundation of it. What actually triggers that sell? And they're all going to go back to the same thing. It's going to take the market falling to trigger the sell. What does smart money do if they want to buy into the market? What do they have to have? They have to have sellers, and that's why they buy into falling markets, and that's why retail traders are always at odds against the order flow in this market. It's not a happenstance that I get emails every week of traders saying I'm in the right direction, but I always seem to get manipulated out right before the move. Well, I'm telling you, I wouldn't get emails every single week of traders saying the exact same thing if it was just a coincidence. It's not a coincidence. The manipulation is there. It's not about reading the chart at face value. It's about reading the chart and saying, what does this mean as far as what smart money is doing? Take profit can be a very, very simple thing. A lot of times we're using that 90 pip tool. So once we've identified the stop run, for example, those that took the stop run here on this move, which there's quite a few that did. I personally didn't. Um, those that were taking the stop run from this point, maybe they were taking it. Let's say they had a kind of a worse entry down here at the close of that other candle. They're looking at 90 pips from this extreme high to get out of the market. So we moved about. What we're going to be doing is when it gets into 90 pips, we're going to be getting out before that point. And so that gives using that 90 pip tool is a good rule for setting a take profit, especially when the cycles are clear. If you've caught the second cycle, say the market's cycling to the downside, and we've caught the stop run, looks like the second cycle down is starting. Well, from the high of that stop run, we want to measure 90 pips. Yeah, good point, Peter. ADR, average daily range, another good point to look for. A very basic rule is using a 2-to-1 risk reward. So we don't want to overcomplicate things. One of the biggest downfalls of traders is they go, oh, I cycle beyond the last high, and that's a way to do it too. But use some basic rules. Don't use the trailing stops, in my opinion. Very baseline when somebody's starting out, use a 2-to-1 risk reward. Generally on a stop run like this, you can get in with a 20 pip stop. From here, it's about 16 pips to the high, couple pips for spread, couple pips above it. You'd have been able to get away with a 20 pip stop easily. With a 20 pip stop, especially when starting out, start an arbitrary take profit of 40 pips. Once you go from there, start looking at the using the 90 pip rule for maximizing those moves. Start looking at okay, are we seeing the average daily range coming at this point? So there's a lot of different variables, but the key is to, again, keep it simple. Use the 90 pip rule. Use a baseline risk reward. Do I think somebody could learn the basics of what smart money does by looking at the front end of the site? Yeah, because Chad and I aren't, we're not marketers. We feel like if we put out what makes sense to people, people will see it and they'll say, you know what, that makes a lot of sense. And I think based on the front end of the site, somebody probably could take that information and be profitable with it. But at the end of the day, the reason people are successful as a member is because they get a daily live reinforcement of how the system works. They get a daily market review that shows how the system works in the past and also what we should expect moving forward. They also get the live training room twice a week, the forum where they're able to interact with traders, and really it's the community feel. Other people can explain things maybe in a better way that strikes another trader differently. We have experienced traders in the room that help the newer traders out, and I think that can is a big help too. So, and really at the end of the day, there's a lot more detailed information. I can only and this just goes to say I can't explain. I'll answer every question somebody gives me in full in the room. I don't try and hold anything back, or in this session, even though it's a free training, I don't hold anything back because quite honestly, uh, Chad and I do this because trading is boring, and not having the ability to be in that community definitely does help. And we have a lot of members that say, hey, we've had some even professional traders that say, hey, I trade the Asian manipulation is generally my main strategy. And I work for this bank, but trading tends to be a bit boring, so I come in and join you guys. So it really depends on the person. Some people come in because they like the community feel. Some people come in because they want to see the live reinforcement. So it just depends. Michael, we appreciate it. Guys, I mean, I think anybody that's been around Chad and I is the fact that um, as far as this training session goes, or as far as what we look at. Look at we did a lot more based on charts in the last training, Daniel. The thing is, you have the most important things I can give people aren't seen in the charts, and that's what I think is sometimes hard to understand. It's a video training course in the back end of the site, Raymond. Well, Carl, don't sign up just yet. I think Chad and I were going to give everybody a discount if they wanted to sign up. Anyways, I mean, guys, it all comes down to the fact that you have to believe, and this should be clearly evident in the front end of the site. If you don't clearly believe what we have to say, then you shouldn't sign up for the course because there's enough information on the site. Chad and I don't put out BS information. There's nothing on the front end of that site as far as trainings go, as far as videos go, that is fluff information or information that's not valuable. And I think you guys have all been around this market long enough to know that that is extremely rare to see that much information on the front of end of a site. And that's because we're happy to put out the information and show people, hey, this is the way you should be trading. That's why Chad and I always say, we say it repeatedly, we say it in front of whoever. There's three people that teach manipulation in this market. We're one of them. If you're not going to learn from us, go learn from one of the other two. Uh, and we're happy to say that because we're not here. We're here to inform people that the market is manipulated, and that manipulation can give you a very good indication of the next direction. And so, whether you're going to learn it from us or from somebody else, go learn it from one of them. Because the mainstream strategies will continue to fail you, as they always have, and that's a question you have to answer for yourself. Have they failed you? If they have, does it make sense that the market's manipulated? If it makes sense that the market's manipulated, uh, then you have to, again, that's what we try and focus on. Go learn from at least, go learn market manipulation. If you're not going to learn it from us, learn it from one of the other two. Well, you can call it, what you like, Daniel. The thing is, are you able to see it in real time and trade it in real time? If really, whatever you want to call it, cause or effect, I don't think matters too much. But the ability is, are you able to see it in real time, and are you able to trade it in real time? And I think that's where the market review comes into play because I predict what I think is going to happen hours in advance. And am I right every time? No. But generally, when I'm wrong, the market never gives an entry. Well, I mean, and guys, let me be the first to say I don't want any people to badmouth him or Martin, because I think that if they're trying to teach manipulation, then they're doing a good job in my opinion. And I can't speak to them on I'll tell you right now, I have seen I have seen Martin stuff, and Martin teaches a good product. I don't use his strategies because I think there's an easy way to do it, as I said, but it doesn't mean I don't agree with him. So, but like I said, I don't. We don't want to charge a monthly payment because plain and simple, if you have the stress of okay, man, I got to make a monthly payment and I'm trying to learn this, we don't want that. We're creating a community of like-minded traders and we're all helping each other. There's things that Chad and I don't know everything. We can learn from you guys. And there's traders that have ways of explaining things differently where, hey, I do this and I do this and this works really well for me. And we're creating a community. And that community to me is priceless because there's a book by Napoleon Hill, Think and Grow Rich, and one of the biggest things he puts in there is the mastermind group and the fact that thoughts flow between people, not just one person thinking of something. When you put other like-minded people around you, that energy flows, and I don't care whether it is on the web or not. Energy flows through thoughts and through through different opinions on how somebody looks at the market, and that's why we want to create the community we have because you have hundreds of traders looking at the same thing and they're all presenting their opinion on it. Everybody has to come up with the way they're going to trade how smart money trades. We have people that only look at hourly stop runs. We have people that are very hyper focused on just the manipulation outside of Asia. People that are focused on levels a bit more. And so everybody's going to come to their own understanding while looking at the same thing. You're going to select what is clearer to you, and that's what we're there to do because every trader is different, and I think that's what the forum embodies it with everybody talking about the way they personally trade it. Yeah, I mean, and really at the end of the day, I don't say anything I don't say anything negative about the other two because I think uh, they're better than 99% of anything else out there. You gotta realize there's three people that teach market manipulation. That's the way it is. And like I always say, I got nothing but good things to say about the other ones.